How do you know when this rout is done?
Well, that's always the million-dollar question. Nobody rings a bell at the top, nobody rings a bell at the bottom, so you really have to use your best judgment. What I will say is when you're seeing the VIX sort of trading in the 30s with a 30-something handle or even a 40-something handle, it's not over. The question is, what would lead it to come lower? I would say that if not the long-term all clear, but the shorter-term all clear would be when the VIX reverts, let's say back below 20. 30 to 40 is certainly an extreme level historically, just as I would say 10 was an extreme level historically. But remember, markets can be irrational for long periods of time, and so the 10 VIX, while not thoroughly irrational, it was very very unusual. That persisted for a while. But if you continue to see these high levels of VIX, which indicates high levels of fear or continued dislocation in the volatility markets, then you're dealing with a higher risk marketplace than you saw before. What tends to happen in a situation like this, if this is really just a correction, is the market will find a level. You do start to see higher volatility at turning points in the market. You started to see it when the market was near its highs. Actually, it was subtle, but the VIX was rising along with the stock market, which was an oddity. Which we now see how that resolved itself, and now we're starting to see it gyrate a little bit. So if do we find the bottom? Let's say down 5%, down 10%, down 15%. It's hard to say, but I would say that you really should be keeping a very close eye on the VIX in here. And I think if you start to see it normalize into the teens, high teens, by the way, not necessarily low teens, high teens, because I think people will have a little bit longer memory about not pricing implied volatility as cheaply as it did before. That's when I think you start to see the market finding its level. Going longer term, which I'm sort of reluctant to do, you've got various situations that can either improve or upend the market. I think we're really wrestling with the interaction of the new tax reform and the Fed's monetary policy. And the Fed's monetary policy is a very crucial one from my mind. We've really ridden a wave of monetary accommodation from the central banks around the world, more or less for the past 10 years. That wave is cresting. The question is, are we at a plateau, where the market can muddle around, or does that wave tail off a bit? And that's really Fed dependent. So I hate to keep coming back to the Fed, but keep your eyes on the Fed. The market's interpretation of the Fed, of course, is expressed through interest rates. And in this case, I would keep also a close eye on the shape of the yield curve. It's not necessarily the absolute level of rates. We've still seen a fairly flat yield curve, which is basically saying the market is worried about higher interest rates in general, but by not steepening the yield curve, it's still relatively complacent that the Fed is going to fight inflation. I think the two do go hand in hand. If the Fed is raising rates, that is showing their intention to fight inflation. And as of now, we still haven't really seen the inflation genie get out of the bottle. But that would be a very big worrisome sign if you really started to see labor market inflation. And that was one of the things that was a precipitating factor last Friday was, why does the market fall on better than expected economic news? Well, if that's not telling the story you want to see, meaning wages are going up, productivity going down, that's good if you're the wage earner. But from an economic point of view, if productivity as a whole is declining, that's really not good for the economy. And it means that the Fed might be trying to fight inflation now, and that was the first step. So when do we see it all clear? There's never really a chance, it's difficult at foresight or even in real time to say what does all clear mean. But I would keep an eye on the VIX as basically being your first and best signal. There's so many other factors at work here, but I would think if you see some relative calm in the market, not necessarily absolute calm, that's probably a good situation for more conservative investors to think about re-entering.